Welcome back. Episode 5, the Enlisted Real Estate Podcast with Brian Baker. I am Richie Fortunato, and we have our super buff, sexy guest today, Mr. Carl Hendrix with
Howdy.
Edge Home Financing.
Edge Home Finance.
Edge Home Financing. Carl, used to be our lender, used to be a preferred lender for Beezer Homes. We worked there.
Yeah, I worked with those guys 19 years.
19 years?
19 years, yeah.
That's longer than your kid.
No, my oldest is 23.
You're young, your boy.
My son's 18. Yeah. That's
Dang.
Whole life almost. That's crazy.
Serious? That's nuts.
Yeah.
So yeah, we did a lot of business with Carl.
I miss you guys.
Dude, I miss you, man. There's nothing like having a lender that you can trust. Like whenever somebody comes, we had preferred lenders, right? But we had 3 of them, and you can use whoever you want. And here's a little secret, and it kind of came out later on. But I used to give them the sheet. And I would circle the name. I did.
Well, that was nice of you.
I had to,
and I appreciate it.
If Carl can do it, he would tell you straight up, yes or no.
Yeah, right.
And it's like, okay, I'm not going to waste my time and sell a house when we can't, and take a home off the market or anything. So, and if you said yeah, I mean it's solid. I didn't have very many cancellations with them. So,
well, I know my job's supposed to be sales, right? Sales, mortgage sales, but I look at a sales guy in my industry as somebody who's pushing something they don't even believe in. Yeah. They're trying to get somebody to buy something that they're pushing, and I just can't do that. So I just assume provide somebody something that makes the most sense to them and makes the most sense to me, and then it just sells itself, right?
Yeah.
So that's how I kind of like to work, and it worked well with you guys. Yeah.
Absolutely.
So I do remember first meeting Richie. It was at Sawgrass, I think. Sawgrass Plantation.
No, the first time actually was when I was in my training. Then they brought all you guys in one by one.
Oh, was that it?
Yeah, at the Maitland office.
At the Maitland office in the dark, right?
Yeah.
Like in that sales meeting. That's right. They kind of paraded us around a little bit.
And you could tell right away.
Yeah.
That's when, we had some other guys like different. Some of them were like from banks, but you can tell right away like who was the pushy sales and then like who Carl was. So it's like, and it like right away it clicked, or for me.
Yeah, I mean, it was good. And then I think I saw you there doing like the. Teresa had you guys doing some kind of a pajama party at Sawgrass Plantation sales office one night or something. I went to that too.
Yeah.
I was like, yeah, Richie and I just clicked really, really well.
So I missed the pajama party. Man.
Yeah.
I think it was like,
interesting.
I think it was for during Christmas though. I think it was a Christmas party, and they just made like a pajama party.
Okay.
You didn't have to wear pajamas. I didn't. Nobody wants to see me in my Speedo.
You wear Speedo?
No, it's actually a kimono that's Velvet. So you get a little bit of the cheeks on the back. Anyway, wait, wrong. This is the wrong show.
But anyway, meeting you guys, like meeting him, get along with Richie really, really good, and he's very friendly, very helpful. I said, well, this clicks. This is great. I didn't know what I was doing, but it seemed to work for him. So I'm like, okay, that's great. But in new home sales, especially when you're a preferred lender and you go around to all these communities and they put in new people like yourself. Yep. I come into Orchard Hills and there's Brian. And to be honest with you, you're a little more intimidating because I didn't meet you yet, right? You get this military background, you get this really sharp wit, very, very, very fast. Richie is too, but I didn't know you.
Okay.
So I'm thinking, guys, this guy's can be a little bit tougher candidate than Richie was. But it just ended up being a lot more fun, man. Every time coming up to see you guys, it was a blast. It was a blast.
We definitely had a lot of fun in that community.
That community, we had a bourbon drawer.
Yes, we did.
Are we allowed to talk about that? Is there statute of limitations?
I don't know. Nobody's listening anyways.
There's not 23 million people watching this podcast?
Yes.
There might not even 23 people.
Give us some time.
Those were the days, man. Orchard Hills was, it took a long time to gain some traction. I remember them breaking ground out there.
Yeah.
So people who run around out there in Horizons West area now, right? Before that place broke ground, that was just all rolling hills of sand.
Yeah.
There was nothing out there. And I'm thinking, and then the road it's on is called Tiny Road, right? So I'm thinking, what's the draw?
Right.
And now you go out there, it's nuts. It's nuts. And I'm thinking, why didn't I buy out there?
Right.
8 years ago, know? But that place is impressive now. But it took a little bit to get it going. And then once it got its grip, man, it moved.
Yeah.
That was
the
really
was still growing.
Mm-hmm.
When I got out there, they were on the NCLB list that no community left behind for the 50-foot product. They couldn't sell it at the time. And my first day out there, we had like a meeting.
Yeah.
And all of a sudden.
And they blamed you.
No, they can't have it. It was my first day.
Richie, I know it's your first day, but this is your fault.
It was my first day in that community. But yeah, and then we couldn't not sell it So it was great. That was a great area, man.
We had some good floor plans out there, good spot. You know,
Yeah.
you see this the vision for what was
Mhm.
coming, which is like right now. I mean, it's happening.
Yeah.
It's
Probably,
but
you probably did like 80% of those loans in there.
I don't know. I did a good deal of them, but you know what? Here's the thing that people don't understand. Despite the great references of the referrals, it's still your customers still shopped. They still asked around. They ask around. They called around, and that's where it gets difficult doing what I do because I'm just trying to. Hey, here's the truth. This is what you got, and then somebody to beat me would go in with something a little less than the truth,
Right?
And then you've got
they twist the numbers.
Yeah. And then you have to tell them, well, I mean, you can take your chance with that if you want. And the problem is once you've lost that customer, you pretty much lost them. You can't get them back at the end. So it kind of stinks. And from that regard, I wish I was a better sales guy than I am. But it works.
They learn in the end, though. I think when you call you, hey, can you help me out?
The best compliment I've had in this entire industry for 24 years I've been doing this was from Renee Colonna. Hi, Renee. She called me after a closing, and I'm not going to use the guy's name because it's not fair to say the customer's name or the competitor's name, but she said, Mark so-and-so called and said he really appreciates you. And I said, Renee, I didn't close his loan. That went to the other bank. And she goes, yeah, he wishes it would have gone to you.
Yeah.
Happens a lot, though.
And I'm like, wow. So yeah, so there's no magic pill there. No magic potion. Is just treat the customer right.
Yeah.
But sometimes you can't protect the customer from themselves. Right? So they hear the better story, the better game. Oh, I'm all over that. And you say, I don't know, man, that just sounds too good to be true. And then even me, I start questioning, well, am I missing something? Is there something that my capabilities are less than these other people? Because if that guy can really do what he says he's going to do, I jump all over that all day long.
Right.
And then he really can't do what he says he was going to do.
Well, I think what happens is, they twist the numbers enough up front to make it look really good. Buyer goes through the process. I'm constantly turning in all my information, going through underwriting. You're requesting this, and that. Then in the end, actually what it is this, and it's different. Right. But now they're so invested. What are they going to do? Go back and start over with you?
Right.
And I think I agree with you.
It's true. It's a cumbersome process. Fortunately, the move I've made recently over to Edge Home Finance, I operate almost as a pure broker, which I didn't even know that existed anymore. So after the collapse of the markets back in 07, 08, I had my own boutique shop out of Heathrow. And once everything declined, it's like, well, you're going to have some serious legal power, compliance power. You've got to have a lot of stuff in-house that's very, very expensive to maintain. So you're better off just going to work for a larger group or somebody who's got all those tools. So I thought after 08 in that era that you had to work for a lender or a big house in order to survive. I just happened to stumble across a couple of people I was talking to this past fall who said, no, I'm very happy being a broker. One guy's a pure broker, which I don't understand because he's completely on his own. He's got no support. He's doing everything on his own. But the group Edge that I got in with, they're just basically the back office. They provide me my paycheck, my compliance. They set us up with the lenders.
It's almost like a skeleton company then?
Well, no, it's you hang your license there as a broker, but they leave you alone.
Okay.
So Edge is, according to what they're telling me and some of the publications I've seen, they're the fastest growing brokerage in the country. So they're relatively small, in my opinion, because I've worked with a company that was closing $4 billion a year. But they're growing, and their business model is great. And because of the firepower we have with the number of loan officers that work for them, we get reduced pricing with a lot of our investors. We get our files get put on the front for underwriting. I was treated to a trip to Michigan to go to one of our investors and get a orientation of their office for several days. They paid for the whole trip, plane fare, hotel,
cool.
All that. So that was really cool. So it really opened my eyes. So stepping out of my comfort zone really opened my eyes to what was available in my industry. And I think I made a tremendously good move for me. I could say right now, I don't have to sell anything anymore. Just like I said, I don't like selling because the products I provide, the things I can do right now, I just have more confidence in what I can do that it just sells itself.
That's very good.
Yeah.
Are you going to get back with a builder?
I hope so. I've got a lot of really cool tools that I don't think exist too much in Central Florida as far as lending goes. I've got a jumbo product now that goes up to $765,000, but it's treated like a conventional loan. So I think both of you sell some of the higher range homes.
Not anymore.
Not more. Okay.
3 to 5 is about where my market is.
Okay. But both of your builders sell in the higher
They
price
do.
points. I know you do.
Yeah.
The jumbo borrower today is subjected to having to produce assets to show reserve money, because almost every jumbo product now needs a lot of reserves. So jumbo underwriting is really, really particular. You run the file through Fannie Mae's system to get an approval, but you don't necessarily go by the findings in Fannie Mae, because you also have a certain amount of reserve requirements. If they own several homes, you've got to have 9 to 12 months reserves in most cases for all the homes that they own.
Gotcha.
But with the system that I have, it's called Nationwide High Balance. I treat everything like it's a Fannie Mae loan. The only caveat is they have to put 10% down when you're in that high range, but the loan can go up to $675,000. And if the findings don't require any reserves, I don't ask for reserves. If it doesn't ask for tax returns, I don't ask for tax returns. They could close on as easy as a pay stub and a W-2.
Yeah.
Just like any other Fannie Mae loan, which is currently up to $510,400.
Wow.
It's kind of neat.
Yeah.
Yeah. And a couple things I didn't know were even available. And you guys can tell me because of the customers and what their hot buttons are. I don't have to escrow for taxes and insurance on almost anything. FHA, yes.
Okay.
VA, 100% financing, no escrow for taxes and insurance. Is that beneficial at all to your customers?
You know, I actually have no idea. I stay out of the mortgages.
Yeah.
Mortgages
Okay.
is not the exciting part of buying a home, but it's the most important part.
It's important.
So, because you can't buy a house without a mortgage unless you pay
Yeah.
cash, but you need a mortgage. So,
Yeah.
I'm not the expert. I tell everybody, listen, I'm not the expert. I stay out of that stuff because it changes.
I was gonna say that's what worries me is like it changes so much. The rates are different.
Yeah.
You know, not knowing if I can't, because I don't have the system to sit down and pull credit of any kind to be like, hey, listen, your credit's kind of low. Your interest rate's probably going to be such and such higher. I can't tell any of that. So like,
Do you ever hear the customer vent or talk to you about what their situation is without you having to
not
prompt them?
until after. I mean, once they've gone through the process, you know, I don't understand this and that. And there's times we'll, you know, the loan disclosure, they'll come and ask me all kinds of questions from the top to bottom, and I'll go through it. But
yeah, for me, a lot of people are still shocked at how much paperwork they have to turn in.
Yeah.
They don't realize like someone's going to give you, $300,000 to $400,000. They're going to need paperwork.
yeah, and I agree.
Yeah, that's always been the issue is that the industry, I guess the connotation is that everybody has a God-given right to own a house and to get a mortgage. They don't really have to prove anything about themselves to be lent the money.
Yeah.
I thought that was like 2005.
Yeah, right. Well, that's, yeah, I mean,
let's not go there.
Well, you know, Wall Street was the puppet master back then, right? So Wall Street created these loan products that I was scratching my head back then saying, this doesn't make any sense. You know, the pay option arm, right? You've got 5 years where you can make a payment that's less than even the interest that's owed. In the meantime, your balance is climbing. And the idea, I guess, behind whoever designed that loan was, well, we're in an increasing value environment. That home's always going to be worth more than, you know, next year than it was this year. Nobody ever saw that at some point that's either going to plateau or drop the other direction, right?
Yeah.
So all of those people who took advantage of that loan product were in a bad position.
Oh, yeah.
When it came time to unload the house or to do something, because now they're upside down in equity. And they blame the industry for it. They blame the brokers for it. And honestly, I think I wrote 2 of those loans the entire time those were in existence. Always caution the customer about, you know, make the 30-year payment or make the 15-year payment. Don't make the less than, you know, but those guys were using that as a tool to grab a house, pay almost nothing per month, and then flip the house. Right. And then there just ended up never being anybody to flip it to. Or by about 2007, 2008, there was nobody to flip the home to. That's when, that's about the time Beazer Homes lost their mortgage company. It was 06, I think. Everything started to decline in Central Florida at that time. I saw a lot of pretty crazy stuff back then. None of it made any sense. And I'm glad that those loan products don't exist today, nor will they be allowed to exist, in my opinion, ever again, because the crooks and the criminals were taking advantage of that stuff, right?
Yeah.
Instead of using the tool the way it was designed, which was to help people out who were in a particular hardship, or maybe they couldn't quite make the payment today, but next month or the month after that, everything's ready to go and they can start making full payments. Well, it just was never used for that. Yeah.
I think that's why we won't have a recession like we did before, because it's not easy to get a loan still.
Well, it's that, and you weren't in home sales back then, right? Okay, so what was happening back then? People could go into a home builder and they could put $1,000 down deposit on 20 homes and buy 20 homes at one time, right? So was it greed? Everybody was kind of greedy, right? So the buyer was greedy, thinking he's going to buy 20 homes, and by the time they come to completion, he's going to flip them for $50,000 or $100,000 more than he bought them for, and then he can retire rich, right? Builders were greedy because they took those risks. They took that risk on by taking $1,000 or whatever small deposit they took on a wing and a prayer that person would close on that deal. And as that stuff progressed over a 2 or 3 year period of time, there was just so much building going on, and then there was just nobody to flip the house to, right? We outgrew the housing market, outgrew the number of players coming in to buy, right? So that won't happen again because we're not overbuilt at this point. I think the idea today, or at least the news I hear, is that the Central Florida market is lagging in new home construction, right? So people are having a hard time finding homes, which is kind of weird to me because it seems like there's homes everywhere you go, though they are on the outskirts of town, right? There's not a whole lot of new construction in town. But I don't think we're going to have the issues ever again like we did before. I don't think. I think Wall Street and the people that have say in all this would never let that happen again. Yeah.
They got in some trouble for it.
They did. Yeah. They did. A lot of companies imploded.
Yeah. Mm-hmm. Companies, people, I still run into some that are, hey, I had this short sale, the foreclosure, I'm just coming out of the foreclosure, whatever. So, it's, there's a lot of people across the board that were affected for sure. So hopefully,
the saving grace to all that, not to get off the subject here, but the saving grace and all of that was that it happened to so many people all at the same time. So people they call me and they say, hey, I want to buy a house. So I got to refinance. And then they start telling me the story. Well, I bought a house at a bad time. And I say, save it. Look, I don't need to hear the 20-minute story. I said, look, no matter where you're walking down the street on any given day, half the people walking past you the other direction, the same crap happened to them, right? Yep. So you're not alone. It's not an anomaly. You don't have to make an excuse for what happened or tell me the story. But because it happened to so many people, there was almost a switch that was turned on. We would have people in the process pull their credit. You'd see the derogatory mortgage account on there. You see that they had to have a short sale, or they had to have a foreclosure. They had to something because it's showing up. It's like it's a beacon on their credit report. And then all of a sudden, I think this is going back about 5 years ago, you pulled their credit at the end of the process and the account wasn't there anymore. The bank stopped reporting it, right? So the banks, I think, and it was just almost across the board. So the banks took it upon themselves to say, hey, as long as we're showing that derogatory credit, which is legitimately theirs and it should be there, we're holding ourselves back from being able to lend money to these people because their credit scores are getting hammered. Right. I mean, I don't speak to the banker. I don't know but that's the only thing I could come up with is that all of a sudden across the board, all of this derogatory credit that people had, it just disappeared. Now, when they had an issue because it's public record in most cases, but it was no longer affecting their credit score.
That's interesting.
So it was like, wow. So now that wouldn't have happened if it wasn't this massive influx of bad stuff that happened all at the same time to so many people, right? So I guess if you could say there's a saving grace from it, everybody was kind of protected from it. If you go to foreclosure today, shame on you, right? I mean, you better have a hardship. Not just walking away from a bad deal. Yeah.
Especially with the market. I mean, the market low inventory, the market's strong. Put it on the market and sell it.
Right.
Don't be greedy.
Right.
Which I think is half the problem is that they're like, man, we'll just price it $50,000 higher, and somebody will buy it, right?
Yeah.
So I want to talk about. We just had Larissa in here, and we're talking about how realtors, when they start showing homes, it's shocking to me how many of them don't get their buyer pre-qualified before they spend the time.
Mm-hmm.
So since you're here, what does a pre-qual actually mean?
Well, there's a couple things that can happen. When you come to me, because I know what I know and what I'm capable of doing, I can take somebody's application, pull their credit, depending on what they do for a living. If they're a salaried person, they know what their income is. It's a no-brainer. If they're self-employed, you're going to have to analyze tax returns. A pre-qualification is a professional like me giving you an opinion that this is going to be a good deal. It's going to work. And I would say, barring somebody completely lying about something about themselves, it works, right? Pre-approval, there's more steps to that. That means you're actually collecting documentation from the customer up front. You're sending it to an underwriter to review it. It's tougher to get to that point because it's tougher to get an underwriter to review something when it's not a real file yet, right? Mm-hmm. They got to put it in the mix with everything else that they're doing, and the stuff that's real files is going to get priorities. How far do you want to take that customer and put them through so much stuff unless you have to, right? But, once they go to contract, the contract has the stipulation there where they have the financing piece in there, right? So if they got like 10 or 15 days or whatever to get their financing in order, or they can back out the contract. So pre-qual versus pre-approval. I've never really had anybody push for that pre-approval and wanted to go that far once I explained to them what that means. But I've also never been bitten by putting that pre-qual letter out there and having it not work, right? So I don't know. I don't know why anybody pushed for the pre-approval necessarily. I guess if you have confidence in your lender, you don't really need that.
Yeah. The pre-qual, I mean, you got to have a pre-qual that pre-qual will tell you what you can afford, what you can, because you don't want to go start looking at houses and not know what you can qualify for.
That's correct. And most of your customers that don't get that before they meet with a realtor, they're usually hiding something. Yeah. That's what I found. Because I get to them after the fact, after they've already been out searching for houses, and you find out that, why are you wasting your time? This person doesn't qualify for anything.
Right.
So I don't know what kind of a bill of goods they sold the realtor before jumping in the car with them or following around and spending time with them. But I wouldn't do it.
It's crazy the amount of time. Like, I've had realtors work with buyers for years, and then they finally get them to buy a house, and then they don't qualify because they have so many collections or whatever the problem is. I was like, how do you not know this? Why are you spending so much time? You can't get them 20 minutes. It's a 20-minute phone call.
Right.
If you and I are spending time with them,
I know.
It's multiple people that end up spending astronomical amount of time for nothing. In the end, not that it's thanks for the relationship, but I mean it's there's other things that we can be doing.
So. Well, I did run across a real quick story. I ran across a customer at an open house, Beezer Homes community, several years ago. The salesperson at Beezer was running this person around for 3 hours, showing her properties. And I kept saying, well, do you want me to talk to her about a prequal? And she said, no, I think she got a prequal from somebody already. So I think she did. Right. I mean, spent a lot of time with her. At the end of the open house, I'm ready to go. And I just say, hey, do you mind if I pull her aside and talk to her? I talked to this customer. She talks a good game, but when you have 48 derogatory credit accounts on your bureau, when you've shown people that you never repay anybody that's giving you an opportunity, right? And everything you're doing is you're putting it out there for what they call that when they try to repair their credit, disputing it, right? Yep. So you dispute everything, so it doesn't affect your. So when you put a dispute on the credit report, the dispute blocks that account from being read by the scoring model. So if you dispute everything on your credit report, anything derogatory it's not read in the scoring model, right? So in the mortgage industry, the systems pick that up, and it says, hey, let's find out about these disputes. Please remove the reference to dispute, rerun the credit, and then rerun the findings. And a lot of times you'll find somebody's score goes from 680 down to 520 pretty fast, right? As soon as you remove the dispute, right? So there's a difference between people saying, hey, that's not my account, I dispute it, and somebody putting a dispute on their credit report, which is, it's terminology that blocks it from being read by the scoring model. After 30 days, your dispute either went through or didn't go through, right? So at that point, really the credit companies need to remove the reference to dispute so it's exposed again, because you either won or you didn't win your battle, right?
Right.
But they don't, so it sits on there, and then you have to, as a consumer, go remove it. But yeah, this person was running around with the salesperson from Beezer Homes for 3 hours. And she really had no business ever getting in the car with this person or anything, because there was no way this person was going to qualify for a house. I mean, this year, next year, probably in a couple of years, right?
Yeah.
So that's a tough one. But you could have saved yourself a lot of grief just by kind of demanding up front, hey, can you please go talk to this guy?
People don't realize that you find everything.
Yeah.
Oh yeah.
Yeah.
Which is interesting. So like on that thought process right there, right? So somebody goes to find a home, they get with a realtor, right? That realtor says, hey, let's get you a pre-qual up front. Let's know what you qualify for. And I know I'm not wasting my time driving all over the place. But when it comes to like new home sales for us, I mean, could you imagine somebody walks in and go, hey, I'd love to show you this house, but first I'm going to need you to get a pre-qual, right, or, show me a relevant pre-qual.
Well, what's fortunate is that you're not having to block off a couple hours of your day to go drive over to meet them at some house, right? You're already in your environment. Yeah. They just happen to be in your environment. And you can show them around, and then, but you don't spend a whole lot of time with them unless they.
Sometimes, I mean,
do you really?
You got people, I mean, they got questions. I mean, sometimes they're good questions, and if there's a bunch of traffic coming in, and your partner's taking 5 of the new traffic, you're on the 1, and they're talking a good game, because I can't do a pre-qual, and
Have you found some of those folks to be less than honest about their ability to purchase?
Times. Okay, many times, yeah. I had somebody just recently. Oh, I'm ready to write. Well, finally, we get her into lending, and they're on the phone. Well, there's bankruptcies, current delinquencies, credit scores below 500. And she was ready to write a contract.
Yeah, got to wonder why somebody's not current on their current debt obligations, and then they want to go buy a house, which is the biggest obligation you can possibly do. Yeah. Mortgage stuff, it's important. It is a massive obligation. It's a long-term obligation. Yeah. That's why the industry wants to see longevity in your career. They want to see, you can't predict anything going forward, but you want to make your best effort to say that person you're giving a 30-year loan to has the best opportunity to repay that debt. Yeah.
What's I guess some people ask me, like the financially sound people, I guess, I don't know how to say it, but they'll ask me, should I do a 15 or a 30-year mortgage? Mm-hmm. I remember when I got you did my mortgage. I remember I asked you the same thing. Yeah, you did.
Yeah, man.
And I
appreciate that.
I remember I asked you, and I don't want to tell you your answer, but should somebody get a 15 or a 30-year, or what's the difference?
Well, the impression people have is that the 15-year rate is so much lower than the 30-year. Hey, I'm just going to go with a 15-year loan, and you have to look at it day to day. Like right now, 15-year is not moving like the 30. Right now, rates are pretty much near record lows, right? So the bond market, which coincides with our mortgage loans, is sitting at record lows right now because of the coronavirus, really. So whenever that remedies itself, you might see the rates go back the other direction. But
it's conspiracy.
Yeah, there you go. So with rates as low as they are, and I have people call me and they say, hey, I want to take a look at your 30, your 25, your 20, your 15, all this. They're really no difference in rates. Like, so you got, let's say you're 3.5 on a 30-year, you're 3 1/8 on a 15, right? And then the 20 to 25 could be in between or one or the other. So why would you put yourself into this massive obligation? Because when you cut the term down in half, you cut the term to 15 years, your mortgage payment, depending on how big your loan is going to jump huge. It's going to be a tremendous jump. Now you're held to that big payment the rest of the term of that loan, right? You can't get out of it. You can't make less payment than what's owed. So I always caution people, hey, you need to be very, very careful before you get yourself into a 15, because most of the time the people I put into a 15 because they demand it, a year later come back and refinance to a 30. So why put yourself through it twice, right? So just be real careful. There are some people who are very disciplined, and I've got some customers, Orchard Hills, case in point, they really wanted that 15-year loan. Now Orchard Hills are big price points, big loans. They can handle the payment. They're happy to do it. They knew what they're getting themselves into, and they reassured me, Carl, I get you. I understand your apprehension, but we got this. We're doing it. Okay. So to answer your question, I would always advise somebody about what they're putting themselves into. And ultimately the decision about if they qualify for the 15, the decision to go with that is up to them. There's just no tremendous benefit today because the rates are so close. If they're like a whole point apart, like if you're at 4.5 on a 30 and you can get 3 on a 15, then by all means, that makes a lot more sense.
Right.
It's just not that way today.
Right. Especially with the rates being as low as they are.
Right. And adjustable rates as well. There's really not a whole lot of sense in taking an adjustable rate when the rate's going to be an eighth or a quarter lower than your 30. It's going to move on you at some point, right? It's either 7 years, 5 years, 7 years, 10 years down the road, it's going to move on you. So why do that? Just go with a 30 fixed.
So with the rates as low as they are in new construction, so if somebody rents a contract today, 6 to 7, 8 months to build a home. I mean, what are your thoughts on rate locks? Up front?
When you lock up front, there's a time value to that money, right? So when you're locking and holding that money up front, you're not getting today's rate necessarily.
Right.
Now, there's going to be, in most cases, what they call a free float down when you get close to the end, but it's within a certain time frame of your closing, which could be problematic. So let's say you lock today, the lock is going to show today's rate plus a factor. So if you're locking out for 12 months, maybe if your rate today was 3.5, you're going to be locking at 4.25, 4.5, something like that. And you're hedging your bets that as you approach closing, the rates are still going to be down really low, and then you can float it down. So you can float it down close to the market, but not all the way back to the current market at the time, because again, the money's been held for you, so there's going to be a cost to it a little bit.
It's a risk mitigation too, though, because if the rates go up to 6%, then you're at least locked in at that.
Correct, and that's the idea, right? That's the idea, or just don't lock, right? Don't lock and float it and take your chances. The problem when you do the long-term locks, at least with the exposure I had to it on those products, is that you're limited on being able to negotiate a deal for your customer. And I always told my customers, I said, we can do that long-term lock, or we can wait and closer to closing, depending on what the market's doing, I can probably negotiate a better rate with just current tools because I have more available to me than the avenues I have to do the long-term locks through. Right. The long-term lock, they're going to take some money from you up front. Some of the lenders take a whole bunch of money up front. And that way you're basically assuring that borrower that they're going to stay with that lender because they put so much up front. It's refundable at closing, but
it costs the lender money, right, to lock.
Yeah, but if you pull away, go to somebody else because you're shopping, right? Then you lose that big chunk of money.
Absolutely.
Right. So I don't know. I haven't had anybody looking to do those long-term. I haven't had the exposure to the builder world lately, but I haven't had anybody ask for that. The only person who did ask me for a long-term lock going back about 2-3 years ago, he canceled that lock. And we went on and closed him with a regular loan, not long term.
Right now, this doesn't make sense.
Yeah, it's just wondering. It's election year, right? And by the time these homes, if they're starting today, you're going to be getting into that October, November timeframe.
That's true.
So I mean, if our rates going to be, they always talk about rates kind of going up around election time, and
here's what we know. Nobody knows.
I was just saying, what do we know? I didn't think we did.
Right. There is no crystal ball. Nobody can tell you any of this or that happens because there's so much dynamic to it, so many moving parts. Rates were climbing at the end of, let's see, when was that? About
2 years?
Just about last summer, right? So rates were really kind of pushing, and we were thinking, man, I guess maybe we don't see the threes anymore. Maybe it's going to be moving out of there. But then just stuff happens. Whatever happens generally in the economy. It used to be if something catastrophic happened worldwide, like a terrorist act or some kind of a war somewhere, that it would affect the bond markets and it would improve our rates. Right now, it's kind of funny how the coronavirus is really affecting things, but because it's affecting China and China's ability to have commerce with all these other countries around the world, all this money's flooding back into the bond market again, safe haven. They're pulling money, I guess, out of the stocks that have anything to do with China, right? So we're just kind of benefiting from all that right now. How long will it last? I don't know. And when it's over, is the market going to move us back? Couple schools of thought is some people in the industry say this is our new normal, right? So everybody say, well, this is where the market usually is. Usually interest rates are 6% range, 7% range, whatever. There were some anomalies back in the 80s and stuff when they're up in the high teens, things like that. But you can't really equate that era to today, right? So when people say there's a new normal, I think that's true. I think rates will be down only because they've been down for the most part for the better part of 10 years, right?
Yeah. It's a different mindset too. You got the millennials, you try to tell a millennial, that I'm throwing myself into that because, buying a home 7 years ago, those are the rates that I know too.
Mm-hmm.
But if I try to buy a house and it was 8% interest, that's a game changer,
Right before 9/11, we're writing loans, paper loans, 8.5, 8.75. If the market moved to 8.75, nobody sneezed. They didn't care, right? If it went down to 8.25, that's pretty cool.
But those low rates help drive those price points up too, because
right.
You counter that, right? One way or another.
Affordability factor, right?
Affordability, yeah. So these affordabilities now, the home prices in the market has increased so much. If we were to go from a 3.5% to an 8%, the amount of people that can afford both of those now at the top.
That's correct.
Yeah, it's just
that's correct.
That would be a market.
Yeah, I think that would be catastrophic, right?
I think so too.
I think even if the rates get up into the upper 4s and 5s, which they were teetering on going back 4 or 5 years ago, they're pushing there.
Yes,
and it freaked everybody out.
Yeah.
Right. So the market, I don't remember what year it was, 2013 or 14. The rates went from 3.75 to 4.75. Virtually overnight. It was like 6 weeks.
Right.
It stifled everything.
Yeah. Everything
in real estate in Central Florida came to a screeching halt. It's the only market I know is Central Florida, right? But it all came to a screeching halt because the rates climbed so fast.
Yeah.
And then you had customers really pissed off and offended that my rates what? Yeah. Why didn't you lock me back then? I said, why didn't you ask me to? Right. Yeah. So there's no crystal ball, right?
Of course.
So, stuff happens and we just hope that never happens again.
They talked about, I remember here, we never see the 3s again, pushing, getting up there to the 5 mark. And then here we are.
Honestly, rates being like, I locked a guy, 2.75, 30-year fixed VA refinance. No points.
2.75.
2.75. So, that money's coming from somewhere, right? So to me, who's making money at 2.75, right? So
yeah,
how long can money be lent below 3% where anybody on Wall Street or anywhere is making any money? Absolutely. So, the whole thing doesn't make any sense to me. I'm happy to do it for my customer. It's no skin off my back. I helped him out and I'll do it again. Somebody qualifies the same way he does and the market's like that. I'll give him 2.75. I'll give him 2.5 if it's there.
Yeah.
Yeah.
That's low.
Yeah. For real.
And you can see, the limited potential to make money on that backside just by looking at what those payment changes are. When you're looking at somebody who's got a 3 and 3.4%, or looking at 3.25, it changes your monthly payment so small that interest rate.
You'd be if you're already locked in and you're on a loan that's at the low interest rate. The government loans are prohibitive to have you refinance. They won't let you. There has to be a certain amount of what they call net tangible benefit.
Okay.
That's to avoid consumers being ripped off by unscrupulous guys, in the mortgage industry who hit them every 6 months for a refi. Hit them again. Yeah. I'll drop it this much and I'll drop it again this much over.
Yeah. All those letters I get in the mail for my VA refis.
New Day USA.
It was like one a day. One a day I have a new lender.
Yeah.
So you can't refinance a VA loan?
Oh, you can.
Oh,
totally. But you have to have a benefit. You have to prove there's a benefit. There's a worksheet that has to go, and then there's whatever the costs were associated with that. You have to make sure that the customer recoups that benefit to their payment over less than 3 year period of time.
Because you did mine. Mine was
I did yours. Yeah. All of those companies online or on TV that look like they're quasi-military companies doing all those lending, they're just companies, and they just happen to focus like USAA and
they're just trying to find a niche. Yeah.
They don't have a product that anybody else doesn't have. They're VA loans. They're done through the VA. I've got access to every single thing those guys do. I just don't put myself out there on TV like I'm a military organization that's helping veterans specifically.
Right. Yeah, absolutely. Because I always get the veterans that come in and they're like, does your lender, do they do VA?
Of course.
Yeah, they do a VA.
They'd be foolish not to.
Yeah, I was going to say.
Yes. The VA loan is probably the best loan. If you're a veteran and you have access to that, you have that benefit, it is far and away the best loan you could get.
I had a hellacious time getting my VA loan, though.
Why?
I was told, so everybody, and I'm including military, banks, right? And going for my VA, I worked overseas, so out of the country, but I was told I didn't live in America enough. Like up front, oh yes, everything's great, debt to income ratios. I mean, you got no debt, whatever, credit scores are great. And then we get towards the end and be like, oh, we actually can't close this loan. We can't give you a clear close because you don't qualify. And why don't I qualify? I don't live in America enough, is what I was told. And it wasn't just one lender, but I had about 5 or 6 that told me the same thing. And I had given up. I don't even want it.
Were you active or the contractor?
Contracting.
Were you a mercenary?
His
face got really.
So, but anyways, like I had given up, and somebody said you should talk to, FBC was the lender at that time that, I reluctantly at that time was like, okay, I'll ask. And, conversation was, yeah, of course I can do it. And I'm like, no. But I mean, can you really do it? Everybody else did the same thing. And then 20 days go by and you tell me something different. So, but I mean, 26 days, I closed. Mm-hmm. So it was good. Mm-hmm. But it was stressful, and being overseas, for 4 months at a time. Mm-hmm. And I had a, wife and a baby that was, one or less at that time. And where am I going to put them?
Right. Yeah, your complication would have been there regardless of the loan type you had. Mm-hmm. It's just the fact that you had a VA loan meant that you got a better rate than most everybody else got on the conventional loan.
Right.
Better terms. I mean, the VA loves its veterans and takes care of them. And they do everything they can to make sure that loan works. If it can work, they want to make it work.
Absolutely.
Yeah.
Can you have more than one VA loan at a time?
You can. It depends on you have entitlement, right? So you're given, if you have full entitlement on your certificate of eligibility, then you can get loans up to the conventional loan limit of $510,400 if you have more than one loan. So you can combine the loans to that. The new VA guidelines are there is no limit.
Right.
If you're buying like one house, you have full entitlement. They don't cap your loan amount at the 510,400, and then you have to pay a percentage above that. You're buying $1 million house, you qualify, it's $1 million loan, right? There's no down payment.
There's a lot of veterans don't realize you still have to qualify for the house.
You still have to qualify.
Just because you have a VA loan, you still have to qualify. I have so many. I got a VA loan. Yeah, but you still have to qualify.
That's right. Yeah, that's correct.
Sorry.
Yeah, no, it's okay. No, it's important. Sure. Yeah. They think I have a certificate of eligibility. It means I can buy a house. Well, it means that you're given the ability to get the benefit.
Absolutely.
But you have to qualify for the loan.
And it's definitely a beneficial loan. I'm surprised when I have, veterans come in and, hey, I've bought a home before, or I've never bought a home before and I'm not familiar with it, or I've never utilized the VA loan. Why? Like, why not? It's, even if you're doing conventional, you're not paying PMI, take that 20% invested into something.
Yeah. What's unfortunate is a lot of veterans have a disability. Mm-hmm. But once they get above a certain percentage of disability, they get their funding fee exempt also.
Yep.
So do you know
the percentage off the top of your head?
Of the funding? Oh, maybe, to get
the disability.
What their rating is?
I can only go by what my customers tell me, and I think it's at 30% disability that might
I can't remember.
I don't know. I mean, that would be a call. You quick call if you're a veteran, call the VA. VA will answer the phone and answer your questions like that. They're very good about it. They love their veterans.
Yeah.
But I think it's 30%. But the funding fee, it just went up. Actually, used to be 2.15% of the loan amount lumped back on top of the loan for first time use, and then after that was 3.3%, which can be pretty hefty. You're buying a $300,000 house, it's $10,000 stuck on top of your loan. Yep. Those fees, I think, just went up.
Okay,
awesome.
Yeah.
For both first time and second time, or
yeah. I don't recall all the numbers. It's a quick Google to see what it was. I mean, it just happened this year, so they've gone up.
But like, let's say Brian wanted to buy a second home, like an investment. And say his house right now, he has I don't know what his mortgage. Say it's 300, right? He has 510. He can buy a house for 210.
Well, I have to refinance.
There's caveat to that. Primary residence only.
Oh, it has to be primary.
So if he's moving out of his current home that has the VA loan on it, and he wants to keep that loan in there, and he wants to rent the house out, no, we just leave the loan on there. If you have enough entitlement to buy the next house, then we just buy you the next house. The next primary, use all your entitlement up.
Okay.
So you can have two houses at the same time with your entitlement.
When you buy, you have to live in it. So you can rent your first one out.
As long as you're moving into as your primary residence.
So I can rent my house out and buy another one.
That's correct.
Oh, Sweet.
Yeah, they don't make you shut it down or refinance or anything like
Yeah.
that. It's an inherent risk of getting a loan is at some point you're going to move out of the house.
Is the principal that remains on the initial VA, is that held against what your total allowable loan amount is?
I believe it's whatever your current balance is at the time. I don't know if it's
Okay.
I don't.
That's what I thought it
Good
was
question.
before, but yeah.
It should be the current balance,
Balance.
because that's all your entitlements doing is covering that balance. It's
Yeah.
not covering the original loan amount at that point.
I just didn't know with the whole new set where they're telling now there's no limit, how does that
Well,
change it?
the no limit is only if that's the only house you're going to own under your VA.
Right.
Okay.
If you have more than one, you're going to be held to the guidelines with the
guidelines.
510,400.
That's good to know.
Kind of weird, right? That
Yeah,
they
a
did it
little
like
bit.
that, but that's because that was our thing. We're scratching our head saying, well, why would we care about how much entitlement they have if they can just buy as much house as they want now with
Right, no
and
problem.
they do. No, it doesn't matter if they own more than one house.
Yeah, absolutely.
So for other people, because I still get a lot of people that come in asking about new home buyer program or down payment assistance. How does that work?
Well, what everybody needs to know about down payment assistance is that those programs actually exist for people in hardships, right? So people come in, they think it's free money. They think it's easy access money. Why wouldn't I do that? Why wouldn't I grab that money? It's sitting there. It's just not that easy to get to it. If you've got money in the bank, those programs don't want you. If you've got a low credit score, they don't want you. They want you to be a low risk, buying a moderate home, somebody who's maybe a single mom. I'm not going to pigeonhole, categorize the clientele for this, but somebody who's in a hardship where they don't have the down payment money, they need the assistance. They have decent credit. They've shown that they have a willingness to repay their debts. They have a stable job, and they're the ones who will qualify for stuff like that. And then it's sometimes they don't have to pay the debt back. Sometimes they do. It depends on the loan program they're going into. But they're good programs for people who are buying a moderate home and who really need the money.
How do those differ from like the first-time home buyer program?
I can tell you those are first-time home buyer programs. That's what when you're saying first-time home
Same
buyer.
thing.
See, in our industry, first-time home buyer means you just haven't owned a house in 3 years. Okay.
Oh.
People come to me and say, "I'm a first-time home buyer." I say, "Okay, but really, you're just going to qualify like anybody else."
Right.
So there really isn't anything to being a first-time buyer that's enticing other than if you need one of those programs for down payment assistance,
Right.
then you can't have owned a house, previous for several years, or you certainly can't own a house at the same time. Like you can't own a house and be buying another one and get down payment assistance for it. They don't let you do that. So I know that I'm definitely not an expert on these things, right? So I've been at the front end on some of them, but then they get turned over to somebody else to actually do the loan who's an expert on those. The interest rate is dictated by the program that you do.
Okay.
So if you think you're going to get into one of those programs and the lender is going to give you the most competitive rate in the market, they just can't, because the down payment assistance product dictates where the rate is on the first mortgage. Okay. So is it advantageous? You just have to be somebody who's in the hardship.
But is there
Right.
is there requirements or limits to what they lend you, or is there like a purchase price limit, or how does that work?
I don't recall there might be some limits in certain counties. Again, there's a dozen different programs that do it, and some have limits and some don't. I think I'm no expert on that stuff. Yeah.
I feel like I've heard that some of them have some of the limits are really just like what's your
Household income.
Household income, which then
There is limits on your household income.
Yeah.
Well, that's for sure.
So
Definitely.
overall, that's how it limits you
Definitely.
on your price points.
Well, and same thing like the USDA, right? Great loan, right? The USDA has on limits on its income also. Like for a 4-person family, it's I don't know what it is now, about 80,000 or something. But there's really with USDA, there's no limit on the house you can buy.
Okay.
Which I actually had somebody in Orchard Hills. We'll go back to this one again. I don't know if it was one of your all's customers, but there were 13 people in the family.
God.
So I think 7 of those people had jobs. So they were all trying to get themselves onto this loan. And we actually had them pre-qualified to buy almost a $500,000 house using USDA.
Wow, Wilson.
Yeah.
Yeah. Now, thank God for the people in Orchard Hills that these people didn't close, because you could just imagine that streets would look like a parking lot, right? Like an apartment complex, with all the cars out there and stuff, right? So, but there is no limitations to the price on the house as long as the income limits aren't exceeded and they qualify. Those programs, though, the ones that you're discussing here, like the FHA down payment assistance, things like that, they're going to be limited by your FHA loan limits. They're going to be limited sometimes by the county. Has a certain amount you cannot go past on a purchase price, things like that. Again, they exist for people in hardships. So when you start pushing to get a $400,000 house, and they're even going to look back sometimes 3 years on your income. Because if you show them last year's tax return, it didn't show much. I want to qualify for that. No, we're going to go back 3 years because they're going to assume, they're not going to, for that aspect of qualifying, they're going to scrutinize more money. They're going to say you make more money. Whereas like if you're trying to qualify like through a normal loan, they beat you up on your income. They don't let you use parts of it. When they're analyzing with that aspect to see if you qualify for the program, they're going to inflate your income as much as possible.
Fair enough. Yeah. I would, right? If I'm giving money, I'm going to cross my T's and dot my I's. I want to make sure that I'm going to get that return. Otherwise, that's a really poor investment, and I probably won't be in business long.
Right. Well, there used to be some programs out there. I don't remember this one, but we helped a girl buy in Sawgrass. She was a teacher. I think it was $25,000. It was just basically a grant given to her. It was one of the settlements with like Wells Fargo or something, right? So as long as they were buying in Orange County or in Orlando, you could use that program, and she got free $25,000 towards down payment and closing cost.
That's pretty cool, So
that's when it makes sense to go outside lender.
I mean, think about it. So like you've got, these teachers that are making, $36,000, $40,000, a year. That's pretty low. I mean, for as much as they do to work. And the same with your firefighters. And you got firefighters who, they're a firefighter, but they have 2-3 other jobs just because they're trying to actually make, a decent wage for the year. And then law enforcement, they're, I know officers all over the place who they do their job and then they're doing side gigs, just to make extra money. So to have a program where, a teacher can come in and get a grant like that to buy a home, like I think that's pretty cool. And that's what it should be, for and used for.
Right.
So,
I was going to say, we ran into this recently with one of our buyers in our community. When somebody's going through the process, right? So when you buy, it's such a long process. It takes 6 to 8 months to from contract to closing. You always tell people, don't buy anything, don't open any accounts.
That's right.
Yeah.
Right. So what happens? Say somebody does go out and buys a car.
Well, it depends.
This really happened.
Yeah,
recently.
You can't. You try to tell people what to do to avoid jeopardizing their ability to qualify for the house. People still have to live. It's a long process to buy a house and to be that disciplined and not live your life, or stuff happens. You just hope that it doesn't damage things too bad. If it does alter the course of their loan, or it bumps their interest rate up a little bit or something as a result, the consumer just has to be aware that, hey, you kind of, I'm sorry this happened, but here's the result. In some cases, it'll disqualify them from the loan because now their debt ratio doesn't work, something like that. That one they have to be very, very careful of. It just happened to you say?
It wasn't me. It was somebody else. It was my partner. And the guy, he went out and bought a truck. So he goes out and buys a truck like a month before, or maybe a couple of weeks before closing. And you have to resubmit all your docs, right? Yep. Right before closing. Now he has a car payment. Now that the income is too high.
Yeah.
He had to go return it. It cost him like $20-something thousand. He had to go return the truck.
Yeah.
To get that off. And then delayed his closing. But
2 weeks prior, they took out a student loan. I mean, it was too low. I mean, there was nothing. There was no recouping from that. And another one, he went and bought a car. And it's not like, you bought a car and your payment on the first one was $300 and the next one is, $350, right? That's a small difference. When it quadruples,
right?
That's on the customer there.
I think on the consumer, what they think is that, hey, if I do this today, it's not going to show up on my credit report for 3 or 4 months, right?
Sure.
You just have to make the assumption that you look at getting some credit extended to you today, it's going to be on there tomorrow.
Right.
I mean, it's just Murphy's Law, right?
Yeah, especially with the way everything's connected now, right?
So
the internet,
the inquiry's there, right? So we always have to do a final, what they call a 10-day pull on the credit report right before the end of the process, just to check on inquiries, to check to make sure something catastrophic didn't happen with their credit, or that they didn't run a bunch of balances up. You typically don't pull it with a credit score. You just pull to look at what the credit has done right
Okay.
before closing, and it shows the inquiries, right? So when somebody goes to car shop, there's going to be 15 inquiries from these different banks, on there, and they have to answer to that. And they have to answer and say, I was looking at cars, but I didn't buy one, shame on them if they lied,
Yeah.
but in most cases, if they did get a loan extended to them, it pops in there pretty fast.
Mhm. Yeah.
Yeah. So you want to avoid that. I've had people actually buy a car to try to get disqualified from buying a house. It was one of your guys' houses too.
You still lose. They're going to lose their deposit. Just 'cause
Well, it wasn't explained to them that way, so I became the bad guy.
Oh.
Every time they did something silly, I would think you're going to kill your ability to transact this deal, but we find a way to make it work. And then they would come up with something else, and I say, "Well, you're going to kill the deal." No, what underwriting approved you? So we got them all with the closing table, and they had to close, and they're really mad about it. And I tried to tell them, I said, because if you didn't close, the $50,000 you had on deposit was gone.
Yeah.
Because just because you don't qualify at the end doesn't mean you get your money back. That means you put yourself in a bad position to not qualify at the end.
There's a difference between going the beginning of the process and trying to get the pre-qual to a pre-approval, right, or a conditional approval, and then getting to the closing table, 6 months later, and you doing something to detriment that qualifying.
That's correct. If you cause the problem, and I don't know what the verbiage or the wording is in your contracts, but I think in most cases, you're building a house for somebody. They better have some extreme hardship before you're going to get them out of that contract and give them their deposit back.
Yeah.
You think about a $500,000 home, and even if you take $50,000 in deposits, that means the builder has already forefronted, $400,000+ to build that.
And they built that house to the specs you wanted on that lot, everything that you wanted. Many times it's not a very appealing house to the next person when you're trying to sell it.
A lot of times where that's
the
case.
Please don't cancel.
Listen, guys,
I saw your options.
Tear it down. We got to start from scratch.
So we're gonna have to stop here. It's running long. I got one more question for you though, because we hear it. I don't know if you hear it, but when somebody comes in and they're like, I'm looking for a house. It's 300. My credit's really good. It's I just checked Credit Karma. It's 760, and then they go and buy that. They do the contract. They get their credit pulled, and then it comes back at 600. And like, I don't understand.
Okay.
What's the difference? Why is Credit Karma?
Well, all of those credit scores that you get from a credit card, Credit Karma, all that. My interpretation is they use an algorithm that's different than what we use in the mortgage industry. Their whole thing, because they're giving you free scores, is to entice you to borrow more money, to start another credit card, to do different things. Because, hey, look how great my scores are, right? Very seldom is the score that you receive online going to match the scores that we pull in mortgages. It's just the reality of it. Most people know it. They get blindsided by it. I have a customer right now who's being kind of blindsided by it. I feel bad for the guy, but he's watching his credit scores climb through these different mediums. There's 3 of them. He's got Capital One card, he's got Credit Karma, and another one. And he's watching his scores climb. And I say, hey, let's go ahead and pull your credit again and improve your situation. His scores barely moved. So, why? It's just because they're using a different model, or they get access to different information, or the credit score that's required to get a credit card is going to be a different model for scoring than the one that's a little more meticulous for getting a house, getting a house loan.
That's why there's usually all the ads on there, hey, there's, entry,
you get those services for free, and you got to wonder why.
Exactly.
Right.
Yeah,
so that's the idea.
Yeah. Good point.
I want to keep you longer, man.
Let's do it, man. You guys, is there somebody coming in after?
No, we're going to do one more episode after this. This one ran real long, but I can. So you're worried about the timing. You're like, man,
I can hang out with you guys while you do your next episode. let you run it, and I'll just chime in if I have any value.
I was going to ask you something else after. So another. I can keep going with you, Carl. Because the process again is so long. So when somebody first buys, right, and you do the prequal, and then you do your first credit pool. Some people don't realize you can, if your credits. What do you need for an FHA, your minimum credit score?
FHA, honestly, FHA itself is a 500.
Okay.
But lenders have their own overlays, so your better opportunities are 580 and above.
580. So somebody, they don't realize, like, if you're 575, you have 6 months to pull it up,
right?
Which is pretty easy,
right?
So, and a lot of people let you, go
that's
to
where
contract and pull it
the
up.
mortgage person, your professional, there is going to look at their situation. Now we're not all credit repair specialists, right? But we've seen so much of this stuff over the years. You can kind of say, hey, you had that ding, that's going to go away, or you're a lot of times if somebody's over their limit, right? Like they have a $2,000 credit card and they went to $1,990 on it, and then it accrued interest, and the next report it shows that it just over $2,000 balance. That's hugely catastrophic to their credit score, right? Because it just shows that they don't know how to handle their credit, even though they didn't run the card over 2,000, interest put it over 2,000, right? But they need to pay it back down below its limit, because going over limit is catastrophic to your score, right? Because that score is showing the person who pulled your credit how risky you're becoming, right? So if you were a 680 credit score and now all of a sudden you're a 580, what just happened on your credit that made you look super risky? Well, you just went over your limit, right?
Is that an easy fix?
Very easy.
Oh,
Just
okay.
pay the balance back down. Yeah.
Oh,
That's
cool.
why I was trying to. For me, I try to pay my credit card full. Month one, I don't want to pay the interest.
Right.
That's correct. And most people don't have that ability.
Yeah.
But
We're not all like Ryan. We can't sell 50 houses a year.
Well, I mean, I use my credit card as a debit card, just
You get the points.
reverse. Well, you get the points.
You
You,
get
know
the
what I mean?
cash
I just take, instead of using a debit card, I use a credit card and I take the debit card, pay it off.
When you get that black card.
Which one?
the American Express Black.
Yeah. I'm not supposed to tell anybody about that one. Though.
No.
What else you got?
That's it,
Throw
man.
some stuff at me. That's it.
That's it. I appreciate you coming out here today.
Oh man, I loved it.
Yeah. Oh yeah.
Love it, man. You guys are great. I miss you. So it's any opportunity to come see you is good, because I can't come walking back into your sales offices. I
Why
guess
not?
I could.
You could.
Oh hell yeah, I guess I could.
Yeah.
That's true. That's true.
Yeah. Be a
Yeah.
prospective buyer for all I know.
It don't matter.
You know what? I got good products that you guys might be able to take advantage of.
Yeah.
So I'll put myself out there to you. Sure.
You need to, man. Well,
Mhm.
thanks for coming out. I know mortgages isn't the most exciting topic, but hopefully
That's what I do.
we didn't put anybody to sleep with this. You know,
It's important. You ain't
But you
buying a
got-
house. Well, I mean,
unless you got lots of money in the bank, you need a mortgage. And there's a lot of lenders out there. I don't know how you really differentiate them all, because rates and numbers are numbers. But I think the biggest thing is the relationship you have with the lender and how you click. So it's important to find somebody you like, because you're going to spend a lot of time. You're going to spend a lot more time with the lender than you will the salesperson. I'll tell you that right now, because the lender's on the phone with them way more than we are.
Absolutely.
Well, you all generally get to have fun with the customer.
Nobody likes talking about money like
And then
that.
I've got to
Yeah,
address them,
totally.
right?
Yeah.
Some customers love us for it, and they're okay. They spew all their stuff to you. They give you more information than you need. They're happy to give you all their assets and all that. And other people, they hold it against you because you've undressed them. You've seen their credit. You know everything about them. You know more about them than their doctor knows. And they hold that against you sometimes. But at the end of the day, it's all confidential. It's not like I'm advertising your stuff to anybody. And I've seen so much of it that I don't. I don't go home and start discussing everybody's files with my wife and kids.
I'm sure the wife and
Yeah,
kids
yeah,
don't-
right. No, they don't want to hear that.
They don't care. Yeah.
Don't care. At the same time, you do it, get qualified, get the home.
Oh, I do have one more thing for you before we take off.
Yeah.
So what's this drink you invented?
3 times.
I know. I'm sorry. I can't
Oh,
help it. I want to hear about this drink you invented.
All right.
You sent me the picture.
That's right. So I did this thing when Richie was sending me the information about this podcast and invited me to it. I just happened to be at Fleming's that night celebrating Valentine's Day with the wife, right? And I'm at the bar and I'm watching somebody doing an old fashioned, right? And you can always smell that across the bar. And you're like, man, that thing's so cool, man. I love that smell.
The smoked old fashioned?
Yeah.
The smoked old fashioned.
Man, that's really awesome. And I just started kind of asking the bartender about certain things. And I said, hey, tell you what. I said, I'm drinking dry, spicy oak Cabernet right now. I said, that seems like that's even more appropriate to put the smoke into it than your bourbon over there, which it's all kind of similar, the barrels and things. So they did that for me. So they actually put my red wine into the thing, mixed it up and gave it to me. It was awesome.
I have the
It was
video. I'll
awesome.
post the video.
Oh,
I have
that's
it.
cool. Yeah, that is
It was
cool.
awesome. It tasted great. I mean, you can tell. I mean, it's got that smoky flavor to it and all that throughout the whole glass of wine. It was great.
Was it Fleming's in Lake Mary?
In Winter Park.
Fleming's in Winter Park. So if you go to Fleming's in Winter Park,
Oh,
ask
you
for
can
the
do it
Carl.
anywhere. Do it.
Ask
Do
for
it.
the call.
Do it anywhere, right? Yeah, do it anywhere. Just ask him. Just say, hey, I want you to take my Cabernet. I mean, it's not going to work with certain drinks, right? Because they don't lend themselves to
Right.
that burnt stuff. But yeah, do it. I think anybody would do it for you. Just instead of putting it in my bourbon, put it in my red wine.
I wish I could try some right now.
Bourbon or red wine?
Well, could we do both?
It's almost noon. It's 11 o'clock.
I was okay with it at 8.
Oh,
I
I
just,
can't do
I
that.
didn't want to be the only guy,
It's like 4 or 5 o'clock in England right now, right?
Yeah, you know.
Exactly.
Yeah.
Absolutely. So if you're doing an all-nighter anyways, right? If
Mm-hmm.
you drink till 3 a.m.?
Yes, I recommend that drink, man. At least try it once, and then you guys can get back to us and say, "Hey, that sucked." Or
Yeah, let us know what you think. If you order it, ask for the Carl,
Ask for the call.
Yeah,
and then let us know what you think about it.
yeah.
But all right, guys, it's episode 5. Thanks again, Carl. We appreciate you coming out.
It's a lot of fun.
Definitely have you back.
We'll put if you guys have any questions about mortgages, we'll put Carl's info in the description, so you can reach out to him.
Yeah, appreciate that.
Tell you right now,
I'm here for you.
he's the man.
Absolutely.
So if you like us, subscribe. You can check us out on all your streaming platforms. If you're watching this on YouTube, I'm sorry.
I hope your server is
Because,
big
you know.
enough to handle all these people.
We're working on it.
Yeah. So appreciate it. See you guys next time.
Later.